Good afternoon, everyone, and welcome to Stock Market Today. It's Ali, Coram, and Ed Carson with a breakdown of the action in today's session, where we saw a little bit of mixed action today, but the Nasdaq and S&P 500 pressing on higher here, Ed. And as always, we've got a couple of stocks to cover. What do you have for us?
Yeah, I want to take a look at Chipotle, Universal Health, and GE Aerospace.
Okay, well, we'll get to those three stocks. But first, let's take a look at the major indexes. The Nasdaq today up 0.3%, while the S&P 500 was up a little bit more than 0.2% today. On the downside, we had the Dow down some 0.2%, but off lows. And then the Russell 2000 small caps still creating issues here, Ed, but the Russell down almost 0.9% today. Just a lot of wild action in small caps lately. But let's take a look at the NASDAQ first.
I mean, this is looking great. There definitely is a handful of names that continue to drive this, especially NVIDIA, but there always seems to be something else that's pushing it up. Still doing well. The only issue here is that the NASDAQ is getting extended from the 50-day line. Now, we said that yesterday. And nothing happened. It doesn't mean anything has to happen. It's just that the risks of a pullback rise. The more it gets extended above, say, 5 or 6%, the more the risks rise. And so it's just something to note. As you're thinking about things, should I add exposure? Should I do this or that? It's just something to keep in mind as we go along. But obviously the NASDAQ, it just looks really tremendous.
Yeah. And so in terms of being extended, you mentioned about 5-6% above the 50-day. We're now about 7.6% above that level. And I'm just trying to go back here to last December. Where were we before we pulled in? It looks like we were about 8% or so above the 50-day line before we did get a pullback. We're in a power trend. So, Ed, it seems like the ideal scenario would be, as we continue to forge higher, hopefully not get too overheated and see some mild pullbacks along the way and get support around that 21-day line, as we've seen in past power trends. We don't know if that's what we're going to get, but we do know eventually there will be some sort of pullback, but just something to keep an eye out for.
Yeah, and if you bought, in April, or obviously things way back in last October, generally you're doing just fine. It's just so that's why you want to be, there's no reason to be, that concerned. Maybe you set up and we get new opportunities. A pause, pullback, yeah, would be probably ideal for the NASDAQ. But yeah, we just have to wait and see. Just not a whole lot of reason to do much of anything right now.
Right, exactly. So great points there. Let's take a look at the S&P 500. Anything to add here, Ed?
It's pretty much the same deal. The same kind of stocks are keeping this going. This is right at a closing high, not extended the way that the NASDAQ is. It's more like 4.5%. Yeah, 4.4. Looking great.
Okay. And let's go to blue chips, the Dow. It looks like we're fighting for support right around a 50-day line that is now declining.
Yeah, and it wasn't looking so great intraday, and it was like around 12:30 Eastern that we sort of bottomed and came off low. So that's nice. It doesn't really change a whole lot. I mean, then so we saw that with pretty much across the board. So that was nice to see a strong finish. It's just fighting here, and it's interesting given that Apple and Microsoft are basically at record highs. They weren't really doing anything today, but just to see how the Dow is struggling so much in that environment to really make a lot of headway.
And let's take a look at small caps. So here's the Russell 2000, yet another head fake, it looks like, intraday yesterday, Ed.
Yeah, and another head fake on the upside. It seems to be trying to hold that 50-day line. So it's just, there was a lot of mix that you can say. There's a lot of on the other hands that you can say, with the good stuff, and you could say even on the bad stuff. It's a lot of mixed action, even within the mixed action.
Okay. And next on our list, we want to take a look at the 10-year yield because, we've seen a lot of economic data and Fed speak this week. So it seems like this is good for stocks to see those treasury yields continue to come off.
Yeah, I mean, it's a 2-month low plus for that. The PPI was relatively tame. And after initially it looked like some of the details weren't great for the Fed's favorite inflation gauge, but as it became a little more looking through it, it looks like they generally was positive. So this is coming down. Definitely good news for that, especially when it's more on the inflation side rather than the economy slowing down too much. So
Right.
this has been good to hear on the inflation side. One reason why I don't think it's helped as much, is that the dollar has strength and has been holding up. UUP, which is just a one way to measure, it's a leveraged account and everything, but this is an upside reversal. It's not far really from not just weekly highs, but really 2024 highs. So that's just something that, while it's not really moving a whole lot, it's not falling like you often see with that. And so that's one reason why we've seen, precious metals come off. This is another reason, like all those companies with big exports, when those dollars come back, it just translates into fewer
Mm.
dollars. So just it's just something that is one reason why the falling yields may not be providing as much benefit as you would expect.
Interesting. Any thoughts on what's causing this divergence, Ed?
Well, I mean, for all the US is doing so much better than the rest of the world. I mean, Europe just cut rates, which is, obviously that's going to make US treasuries more attractive, even with those yields coming down. And, the US is just doing a lot better than a lot of other economies. So, that's just going to be a natural pull up for the US. I mean, look, it's great that we have a better economy. We'd much rather have ours than others, but there's just those other trade-offs that you get as well.
Great. Okay. Thanks for that explanation, Ed. Let's talk about some stocks. So here's a look at Chipotle. In full disclosure, I did take action on this today, and I decided to buy some CMG Ed shares up about 3% today in some volume, clearing a 3,260 level, which in a couple of days from now, we're going to get that 50 for one split.
50 for one split. And if it had just waited a couple more days, we would have had a flat base. But this was so close to that. Being a flat base, it's also still reasonably close to the 50-day line. We had a nice bounce off the 50-day this week. We tried a few, a week or so ago, but now it came back. The RS line, the relative strength line, isn't at a new high. But look, I mean, the Nasdaq and S&P are searching to new highs. I mean, anything that has any kind of pause is going to see that coming off. Clearly a long run before that. This is not like a laggard, that's going on. That's a strong relative strength line. So that's a positive. This is a strong group. That while there are some losers in this group, this Chipotle is definitely among those that's doing very well. So, nice pickup today, Ali.
Yeah, yeah. I think also, even though we don't have pattern recognition identifying a flat base, as you mentioned, which it doesn't quite qualify for, there is an ascending base type feel to the pauses and pullbacks that this stock has had. And this recent test of the 10-week line, is arguably maybe the second or third test after that cut base breakout late last year. But if you're looking at the 50-day line, I think this was the first actual touch of the 50-day. Maybe in January, it may have touched the 50-day, but at least it seems like for the bulk of this year, this was the first pullback all the way down to the 50-day line. Got a little extra shakeout there, as you were mentioning, Ed. So we'll have to see if we do get some sort of momentum from this 50 for one stock split, or at least that to not be a cause for this stock to fall apart. But we'll have to see what happens here. You would think, given the outsized influence, it seems at times with the options market, that having a 50 for one split of a stock that's now over $3,000 might help a little bit. But also the fundamentals. You mentioned the strong and steady growth here. So a fundamental and technical combination that we like to see. So we'll have to see what happens. I think, a decisive break with a close below that 50-day or a 10-week line, a good area to be looking at in terms of setting a stop.
Yeah, I think you're right. And I do think you talk about this ascending base. This is like the fourth time we've almost had a flat base. So in other ways, if you think of these as flat bases, then this really is the first test, from that perspective. Sometimes we think about the first one, but that's it. That's so like these almost, it's like literally like a day or two away in almost all
Mm.
these cases. And so it doesn't feel like it's been this long stretch without a pause. It's had lots of pauses, but it's like it's quick service. These are quick service spaces for sure.
Exactly. Okay, let's move on and talk about UHS. This is one that you put on our radar this morning, Ed, on IBD Live. So, what are you seeing on the chart here that you like?
I mean, this is holding up well today. It came down and tested the buy point, tested the 21-day line, and just went right back up. And it's had a nice breakout here. The fundamentals are pretty good here. I mean, the revenue growth has picked up a little bit. The earnings growth was strong. It's pretty strong in 2024, 2025, and the story is pretty nice. It's like, honestly, it's post-COVID. We have an aging population. There's a lot of medical procedures out there, and hospitals are sort of benefiting from that. There's a number of hospitals that are doing well. This is an 18 out of 197. So while it's defensive growth, and if the market is sort of feeling a little iffy, and it just sort of like just a little bit, I mean, it's a market rally. It's not even under pressure, but that's often a time when defensive growth names can do
Mhm.
well, and this one is doing well, and some of its peers are doing well, and it might even form a 3 weeks tight here. So just showing some positive action quietly over the last several weeks.
Right. Yeah. And in terms of the story, I totally agree with you, Ed. And just anecdotally, being involved with my grandparents' healthcare and things like that, they are having to wait a long time to get these appointments with
Mm.
doctors. I totally agree with that post-COVID angle, and people now starting to get other things addressed and needing to go to hospitals to be able to do that. All right, next on the list, let's go to GE Aerospace. Talk about the first test of a 10-week. Well, this is still very much a test in progress, and GE could be at risk of closing below that key moving average for the first time in a number of months, Ed.
Yeah, so that's just something to watch. As you say, it could be a test. The volume has been sort of light on this pullback, so it's not been. But today was sort of decisive, not decisive. It was clearly, I wouldn't say decisive, but it's clearly below the 50-day line. It's not like you don't have to squint. There's no doubt.
Right.
It's below the 50-day. It's below the 10-week. It undercut the lows of the space. Mind you, it's only like an 8% deep base, so it's not. So maybe this is just a test, and maybe it comes back up and has this little mini double bottom.
Right.
So I wouldn't. I mean, I think that. I mean, not too many places where you would have bought in the recent weeks, but if you're a longer term holder, you can be waiting. You can decide, and it's really sort of depending on how it is. If it falls much further from here, you might want to definitely be thinking about taking some partial profits, but it could also rebound. It does matter about how much you want to believe in this name. Obviously, you would be up a lot because you'd be up like 50% plus if you bought it from the last breakout. So you could
Mhm.
certainly hold it if you wanted to, but this is notable. We do talk about some clear breaks on volume and clear breaks, but it's not clear breaks below the 10-week line. There isn't the volume. So it's definitely
Right.
worth watching here. So if it breaks further, I think you'd want to be starting to think about that, unless you really want to hold this for the long term. If it rebounds quickly, hey, this might end up, it could very quickly turn into a buying opportunity again. So, this could be a great shakeout that really hasn't had one for a long time.
Mhm. Very well said there, Ed. Totally agree with all of the points that you made. All right. I think that's it for today, everyone. Thank you so much for tuning in. And be sure to check out IBD Live in the morning, starting 10 minutes before the opening bell, investors.com/IBD Live for all the details on that. We will see you there. And then we'll also see you right back here tomorrow after the close.